We're talking about West Coast paper mills. They just came out with a set of numbers. We're currently joined by Mr. Saurav Bangur, the Vice Chairman of the company. Hi, Mr. Bangur. Thanks so much for joining in, sir. The numbers looked phenomenal, in fact. You're confident of keeping this kind of a pace up. What's the outlook on margins going ahead?
Yeah, we just come out with our Q1 numbers an hour back. We have posted healthy numbers, I would say.
Yeah.
So this quarter has been good relatively if we compare with the corresponding previous quarter.
Yeah.
Going forward, I would say it should be relatively better compared to Q1.
You can better these margins of 17.5%, 18%?
Yeah,
What's causing this?
See, there has been a couple of factors affecting the market today. Demand supply has been relatively good.
Yeah.
There has been some disruption in the supply of some of the paper company in the market. So that is why markets are looking good, which is very unusual, I would say, in this time of the year because paper is generally slack in these months.
Yeah.
So sales are good, demand is there in the market. I would say definitely that going forward in Q2 and Q3, we should be coming out with healthy numbers, I would say.
Wow.
Q1, though it is relatively better compared to previous quarters, but we had some annual maintenance in our plant, in our power block.
Okay.
So our production has been relatively lesser in this quarter.
Okay.
But in spite of that, we have posted good numbers because of cost benefit as well as sales price relatively moving up. So relatively by and large, Q1 has been good. But yes, going forward, the way things are, keeping my fingers crossed, Q2 and Q3 looks positive to me down the line.
So can you give us some sense of, since first quarter is good, second, third, you're expecting it to be good. How do you expect to end the full fiscal in terms of top-line growth? And also give us a sense of pricing. How have realizations done in the first quarter? What's the outlook on paper prices as we go forward?
Okay, now if we talk about the entire financial year, our top line will be more or less same in terms of volume because we are operating at 100% capacity utilization.
Okay.
So we would not be getting any relief as far as volume is concerned. But going by the sales price, I would say definitely 5% increase should be there in the sales price compared to previous financial year. So,
how much of that has already happened? I mean, have you seen and have you managed to undertake any price increase in the first quarter? Are you expecting prices to trend upwards from here on as well?
Yeah, a little bit of price increase has been factored in as far as Q1 is concerned. But I would say definitely much is still to come because generally the season picks up from December months onward.
Okay.
And as I was mentioning earlier, there has been some disruption in the supply of a specific paper company.
Yeah.
So relatively, there is a lot of headroom available and prices should move on in fact, Q3, Q4 moving onwards.
All right, Saurabh, let's get in some guidance. And last year you did around 1,700 crores. This year you're saying things are looking good. There's been a bit of a price increase. You're functioning at optimum capacity utilization. So what will the revenues look for the coming fiscal? And also, could you give us a sense, your telecom cable revenue, what's happening over there? Any plans of demerging the business and making it one company a pure paper play, one company a pure telecom cable company?
Yeah, so if you talk about telecom business, definitely it is a merged unit as of now.
Okay.
This year, I would say FY16 was relatively depressed compared to FY15.
Okay.
Moving on, I think there has been a lot of players additions in the current financial year. So I'm not very optimistic about the working of telecom in the current financial year.
Okay.
But yes, at the same time, there is a lot of demand coming in from, in fact, optical fiber segment.
Yeah.
So prices might not be very comfortable, but yes, volume growth looks positive. We definitely have in mind to demerge this business moving forward. But relatively, once the segment has a very healthy balance sheet individually, then we will definitely demerge this business going forward.
All right, Saurabh, what's the total debt in the books? And if whenever you decide, to demerge it, I just want to understand both the segments, how much of debt is where?
See, if you talk about the entire balance sheet as a whole, our debt stands at 350 crores.
Okay.
When I talk about 350 crores, this is purely the repayable debt at a cost. because we have certain sales tax deferral scheme, we have certain amount with us, but those are like cost-free loans with us.
Okay.
So if you talk about repayable loan, that is to the extent of 350 crores.
Total
That is, total of 350 crores on our balance sheet. And the way we are going with our cash earnings and the way things are looking positive with us, so definitely 2 years down the line, I think we should be able to repay this entire debt on our books.
So you'll be debt-free in the next 2 years is what you're saying?
Yeah, definitely, yes. But at the same time, we have something in our mind going forward because our top line is stagnated. So we have something in our mind. So yeah, so we might add some capacities and some debt obligation might be taken. But keeping in mind, if we move on as on current status, we might be debt free in the next 2 years down the line.
Saurabh, that's a teaser. We can't let you go on that. You have something on your mind to prop up the revenue numbers because you're at 100% capacity, almost utilization. Are we talking about acquisitions? How soon will you let us know something that's concrete?
Nothing about acquisition, I would say. But yes, for the last 5 years, our top line in terms of volume has been stagnated.
Yeah.
1,700 crores of our top line, that is more or less at 100% capacity for the last 5 years.
Okay.
And the way things are going forward in the paper industry, I would say things are looking positive. Demand is there. So we definitely have something in our mind.
So you're talking about organic growth. You'll perhaps, if not acquire capacity, you'll basically set up more capacity. Should we understand that?
Yes. Something is there, definitely, yes. But we have to even keep the debt obligation even in our mind.
Okay.
Because currently, looking at the debt EBITDA multiple, we are operating at, in fact, we are currently at 2.5 times the debt profile. So keeping into this in mind, we definitely do not want to stretch beyond 3.5, if at all, maximum 4. So debt is even there in our mind. At the same time, top line growth, even we want to do something in our top line growth. Right. So how do we have a balance of the both of them? We have to move move it forward.
Well, Saurabh, we can tell you the market's liking what you're saying, the fact that you're trying to reason this out and balance out, the growth driver, getting that added capacity and keeping your debt under check. Stocks up 5.5% as you were having that conversation. Thanks so much for joining in.